What's going on, everybody? We back again. So our next video in this basic course is going to be our understanding and reading price quotes video. So in this video, what we're going to be doing is getting an understanding for what makes up a price quote and how we read it, how do we understand it, what are the networkings of it, I guess you could say. So first thing we'll start off with is some terms and definitions. So that way, once we get to talking about them in the video, you'll kind of already have a reference point. So before that, a little water. Just a lot of words. So first you have your base currency, right? So your base currency is going to be the first currency appearing in a currency pair quotation. So take Euro USD, for example. The euro is the base currency. The base currency represents how much of the quote currency is needed for you to get one of the base currency, right? So remember we said what this would equal, right? If it was Euro USD equals 1.1156, right? That is saying that the US dollar, the quote currency, needs to equal 1.1156 to get 1 unit or 1 euro, right? So the quote currency is the second currency appearing in a currency pair quotation or exchange pair. So take Euro USD, US dollars is the quote currency, right? So US dollar, right? Bid price. So the bid price is the price at which you can sell 1 unit of a currency. So remember how I told you you can buy or sell in the foreign exchange market? Okay, well, in reference to when you want to sell, that means you're looking at your bid price, right? Ask price. So your ask price is the price at which you can buy 1 unit currency. So when you want to buy 1 unit currency in the foreign exchange market, what you're doing is you're looking at your ask price, right? That's going to tell you at what rate can you buy this unit. The difference, the spread, right? So spread is the difference in which you can buy or sell 1 unit of currency, right? So I'm gonna have a picture later on. We're gonna look as far as when you're looking at, you're logged into your Forex broker, you're on MetaTrader 4, you're looking at what you need to look at, or you're looking at the charts. What you'll see is a bid and an ask price side by side next to each other, and we'll get into that. And the difference in the price at which you can buy and the price at which you can sell is what you call your spread, right? So pips is the unit of measurement to express the change of value in two currencies, right? So how we're able to calculate how much the exchange rate is changing is by these pips, right? That is the fractional, that is the unit of measurement we use to understand what is changing in reference to that exchange rate. So a pipette is a fractional unit of measurement that is worth 1/10 of a pip. So what that is functionally saying is a pip is worth 10 pipettes, or it takes 10 pipettes to equal 1 pip. A lot size is the amount you are trading per pip. So per pip is telling you, well, your lot size is like, let's just say 0.10, right? That would be $1 per pip, right? So for every pip the chart moves up or down, hopefully in your favor, you're making $1 per pip, right? So reading price quotes. In Forex, currencies are always quoted in pairs again. So example, Euro USD 1.1156. The price quote is stating that 1 euro is worth 1.1156 in US currency, right? The first currency listed is your base currency. Euro, once again, is going to be your base currency. The second currency is always the quote currency, US dollar, quote currency. The price listed is the exchange rate for the two. Boom, your exchange rate. Currency pairs are always quoted with two prices, your bid price and your ask price. The bid price is the price at which you can sell a currency pair, and the ask price is the price at which you can buy a currency pair. The spread is the price difference between the bid and the ask price. All right, so here's an example. Once again, we have our base currency. Here's euro. Quote currency here is going to be the US dollar. Our bid price is going to be the first initial price stated, and our ask price, which is going to be the price at which we can buy, is going to be our second. We see we can sell a euro at 1.1156 in euros currency, but we can buy at 1.1158, right? So that difference in that price variation is the spread. All right. So this is a screenshot from my MetaTrader 4, right? So once you get acquainted with a Forex broker, the next app you'll need would be MetaTrader 4. So this is what that application looks like real world. Like you download the app, this is what it's going to look like, at least in advanced. There's a simple tab, but I like advanced for things like it does show you the spread and the low point and high points of the day. Now I will say this was a screenshot after market closed, so the spread number in itself is off. But if you can see, the main purpose of what we're looking at here is we see these are going to be our bid prices, right? So these are the prices at which we can sell. And these are our ask prices, right? And we see it even lists the spread. So the difference, 2, 3, 2, 3, right? You know what I'm saying? 10, 6, boom, 13. GJ 36, 39, you know, just showing us that difference in price. Measuring difference in exchange rate, right? So now it's time for us to get into pips and how do we measure the difference in this. So in Forex, the unit of measurement to reflect a change in value between two currencies is called a pip. If Euro USD moves from 1.156 to 1.157, prices just moved up 1 pip, right? Most pairs go out 4 decimal places, but there are some expectations like Japanese yen pairs. They go out 2 places, and US oil goes out 2 places, and a few other different things that just go out 2 places. Many brokers and institutions will print price as 1.11563, and this is because the smaller unit of measurement exists past the pip, right? So we were talking about that in reference to what we were going over in our terms and definitions, the pipette, right? So 10 pips, pipettes make up 1 pip, right? And I don't want you to get too caught up on that, but it is something you need to know, because once you start looking at the charts, you'll see this number and you're like, hey, wait, what is, I don't want you to start trying to calculate in pips and you're not calculating pips, you're calculating pipettes, right? So especially when it comes to looking, I'm just taking a look at my MetaTrader 4 here. Yeah, especially when it comes to looking at MetaTrader 4, I want to make sure everything is taken care of. So pipette, right? So unit of measurement is called a pipette, and a pipette is a fractional unit of measurement that is 1/10 the price of a pip. So it takes 10 pips to move a pip. So if Euro USD is 1.1563, 3 represents the pipettes, right? If Euro USD moves from 11563 to 11564, prices just moved up 1 pipette. On trading platforms, the digit representing 1/10 of a pip usually appears on the right of the 2 larger digits, right? So let's see, it does have that example. Let's see if it has it. I don't have that example. Okay, yeah, Euro USD, we see pipette is this little file right up here in the corner, right? USD JPY, and we see price goes out, Japanese yen yuan pair, price does go out 2 decimal places. US oil price goes out 2 decimal places. And also things like indices and gold. But for the typical foreign exchange pairs, price goes out 4 places, 4 or 5 places. GU here, standard major pair. So calculating our pips. So like we referenced, our 4th place out is going to be our pips, right? On average, on most pairs, our 4th place out is going to be how many pips something is moving. Our 5th place is going to be our pipettes. Now, kind of think of it as like a timer, right? As one number moves, up to 10, the next move goes up. As one, this tongue twister, as this number moves up to 10, then this number moves up, right? And it's kind of continuous rotation. And we'll break this down, a couple examples to kind of help you better understand how to recognize and count pips. And just take some time as you're doing it, going through, as you're looking at charts, going through trades, as you start building out trading plans, understanding, calculating what pips, how many pips you want to move per trade, things like that. Calculating these pips will, become a little bit faster for you and a little nice. So a few examples here. If price moves from 1.11563 to 1.11663, price has now just moved 10 pips, right? And that goes back into the stopwatch because how price moves 0 to 9, right? So you'll have 6 move up to 9, so 6, 7, 8, 9, and then it'll restart to 0, and it'll move this 5 up to a 6, right? In reference to how these rotate out. So if price moves from 11563 to 11613, price is now just moved 5 pips, right? So we got 56, 61, 5 pips, kind of a little math there. Lot sizes, right? So this is the bread and potatoes, right? Or does it mean potatoes? Well, only meat, so I'm not gonna say meat and potatoes, but back to what we're talking about. So how we make money is a combination of the amount of pips we catch and the lot size that we enter for this trade, right? So lot sizes come in 3 different categories. You have your micros, your minis, and your standards, right? So your lot size, once again, determines how much money you're making per pip, right? So boom, little example here. So you have your micros, right? So micro are in cents. So you have 10 cents per pip, 20 cents per pip, 30 cents per pip, so forth until you get to 90 cents per pip, right? So just in reference of kind of the levels you can take things and just how simplified things can be taken with the right risk management plan and a trading plan in itself. We see for 20 pips with let's just say a 0.2, right? So a 0.02, my bad. So we see we got a 0.02 here, 20 pips to make us $4, 40 pips to make us $8, 60 pips to make us $12. Now we'll go over the minis, right? So minis is dollars per pip, right? So a 0.1 is $1 per pip, $2 per pip, 0.3, $3 per pip, so on, right? And you're also able to change the 0 to a micro lot. So you can have 1.5, which would be $1.50 per pip, $1.60 per pip, things like that. You can change that out. Those lot size placements still accumulate through a whole. So let's take a mini, right? So let's just say we got this same, we're gonna stick with the same 0.2, right? Or same 2 categories. So you got a 0.2. So that is $2 per pip. At 20 pips, that is $40. At 40 pips, that is $80. At 60 pips, that's $120. Now, this is the same 20, 40, and 60 pips that we just caught max of $12 on. We'll see now we're able to catch $120 on these same pip range, right? Now we'll go over to a standard. Now, standard is in forms of tens per pip. So you have $10 per pip, $20 per pip, $30 per pip, $40 per pip, right? So go back to that twos place and we see 2.00, right? It's $20 per pip. 20 pips pays us $400. 40 pips pays us $800. And 60 pips pays us $1,200, right? So just goes to reference, you don't have to catch a million pips. I know if anyone is familiar with other Forex traders or other people, you don't have to catch an insane amount of pips, right? It's really about making sure your risk management is in alignment with your trading plan and with your kind of your ratio on what you want to risk to reward, balancing those things out. And you can see you can excel off just small pip ranges, and you want to start off on micros, build your way up. Next thing you know, you trading standards and you going buck wild. So let's just take a look at something really quick. I want to head over to the quiz. So this is the Forex-based course understanding and reading price quotes quiz. I want those of you in the Discord channel, go ahead, head over, get that quiz taken care of. Like I always say, it's not only about learning knowledge, just about testing knowledge. Make sure you really got it solidified in your brain, right? So with that, we're going to end this one. Can't wait to see you guys on the next video.